Good afternoon, everyone, and welcome to Stock Market Today. It's Ali Coram, Justin Nielsen here with a breakdown of the action in today's session, where we saw the NASDAQ undercutting a key long-term technical level. We'll take a closer look at that, but this third wave down is looking almost like a tidal wave right now. I know that's what someone on the team was saying, Justin, but we'll analyze the indexes. What do you have for us on the stock front to check in on?
We'll take a look over at retail, Walmart, something that's holding up a little bit. Over in the energy section, on the earnings front, we had FTI that was up today, but earnings doesn't treat everything kindly. And although Arista Networks didn't have earnings, its influence from Meta had that one getting knocked around. So we'll take a look at all three of those.
Yes, we will. But first, let's take a look at the major indexes. The NASDAQ today down 1.8%. The S&P 500 off 1.2%. The Dow down 0.8%. The Russell 2000, though, it did manage to eke out a gain, up 0.3%, but we know how badly beaten that has been. So, Justin, in terms of the downside levels we've been keeping an eye on, as a reminder for folks, we were looking at 13,000. We also were looking at that 927 low just below that, and the 200-day line. And now we're below all three.
Yeah. So next stop looks like it could be down to the 12,270 level. Right around there where we were back in February through April and May. That was a kind of an area of resistance. And a lot of times those areas of resistance can become areas of support. So it'll be interesting to see. And look, we don't have to come all the way down there. This could be the stopping point right here. But that is a level that would kind of make sense based on where prior resistance was. But the bottom line here is that we are seeing a lot of destruction. A lot of the stocks that we kept on talking about, where the relative strength is looking good, the stocks are holding up. That's not happening as much anymore. We're not seeing as many of those, and especially among the Magnificent Seven that was getting so much attention, they're just not looking as magnificent. A lot of those. This week has been a big earnings onslaught, and next week is going to continue. But we've been seeing some cracks in a lot of those Magnificent Seven names, and that's been just filtering out to other areas. So even when we have been having rises, you mentioned the Russell 2000. Let's just take a look real quick there, because the Russell 2000 at one point was actually up over 1% today. But it was one of those things where a lot of times in a bad market, the things that are up, or the days that are up, a lot of times it's the ugliest looking charts, so that was not something that was giving me any confidence. But all of the indexes really closed poorly. They tried a midday rally, and basically everything was in the bottom quartile, save the Russell 2000. So yeah, you can kind of see how the NASDAQ on the intraday chart, it looked like it was trying to rally a little bit, but just couldn't hold it, and closed poorly. So it's really important to kind of watch how these indexes close. Kind of gives you a sense of the direction. And again, I think it's we went to correction a while back, and it just really doesn't seem like a time to be having heavy exposure or trying to catch a bottom here. They say it's like trying to catch a falling knife, and I think this is a good example of what that looks like.
Right. And even before we went to market and correction, I believe, we already were recommending light exposure. So continuing to lighten that as we hit resistance and the selling started, definitely seemed like the prudent decision. Justin, I also want to mention, while we're talking about the NASDAQ, since it's a big earnings week this week for the tech earnings, this shows that you can't just have one stock rescue the entire market, even if it has a heavy weighting in the index. Microsoft yesterday up on its earnings report today, giving it all back. Meta this one was up after hours, so we thought, okay, here we go. Maybe Meta's gonna help provide a little bit of relief, and then it too ended up falling today, off lows, but still a poor reaction here, Justin. And Apple, another big tech name. Earnings haven't come yet, but like the NASDAQ, it now undercutting a long-term support level. And we're seeing the same for a lot of other mega tech companies, Cisco approaching its 200-day line, others as well.
Did you
Just
bring up
really,
Alphabet already?
I haven't.
Yeah, Alphabet.
So yeah, oh
Yeah,
yeah. So that one,
definitely.
that
Yeah.
was a gap down that is
Mhm.
continuing to get worse.
Yeah, I
So just
mean,
a
and
lot of
and
damage
this
here.
this was one that was holding up so well. The relative strength was looking great, and I kept on talking about, hey, look, XLC, seems to be like an area because it was Meta and Google
Hmm.
in those, and it was holding up so much better.
Yeah,
And
2 days ago that looked great.
right, exactly. So, again, a lot of times, you can kind of feel like, oh, well, I'm in the things that are the best right now, but bad markets tend to, try and get everything. So that's certainly what seems to be happening here.
Yes. Okay, let's also take a look at the S&P 500 because it already had a close below its 200-day line. Tried to find support right around that 4200 level, but giving that up and taking a look at the weekly chart here, you can see that damage. So we've basically, round tripped now to where the S&P was back in May.
Yeah. So again, this is just not looking like a strong market right now. Doesn't mean that the worst is over. I mean, it could be. So this is why we try and do the analysis day by day. Today, not good. Tomorrow is another day. But before we get too excited, we're never going to rest our laurels on a single day of gains. We really need to see kind of a confirmation of that, and that means we're going to have to be a little patient here.
Yeah, continuing to take things day by day. A great reminder there, Justin. Okay, a brief look at the Dow before we move on, because why not? It was holding above its 1023 low for 2 days, but it now back below its recent trading range as well. So undercutting that entire area. So like you said, Justin, taking things day by day, can't just look at one day of strength, even though we are at oversold levels. Traders need to be careful here.
Yeah, as much as it's important to kind of recognize when you're at oversold or overbought levels, that's not a signal in and of itself
Yeah.
to do something, because you can always get more overbought, and you can certainly always get more oversold.
Yeah. Totally. Okay. Let's take a look at a signal of market breadth here too, really quickly. So the S&P down about 1.2% today. RSP holding up a little bit better. So does it is in terms of the decline down just 0.2% today? We know in general it has been weaker than the S&P 500, but is this just showing that the selling was mainly concentrated to the bigger names, Justin? The Russell
Yeah,
2000 was up today. So is money just flowing out of the big old leadership?
yeah, exactly. I think what today showed was, and look, RSP was still down, right?
Yeah.
So that's most things were
Just down
down.
less. Yeah.
Yeah, it was just down less, and a lot of things were kind of in terms of the advancers versus decliners on the NYSE. It was about evenly mixed, but when you have the big market leaders, the things that we were kind of pinning the index's hopes on uh, for a lot of this year, that's with those breaking down, it's been a lot tougher. But even though RSP wasn't down as much today, that still looks horrible. I mean,
Yeah.
that was kind of the first to undercut some
Mhm.
of those levels. It's been below its 200-day moving average line for weeks now, whereas
Yeah.
the S&P 500 and Nasdaq just got below there. So it's no hero.
No, not at all. Okay, well, let's take a look at the 10-year yield reversing lower today, but still not providing relief at this point. I know we've been talking about wanting to see some sort of stabilization, but seeing the 10-year at historic levels as of late definitely hasn't been helping equities.
Yeah, and remember, it's not so much that they're tremendously high historically. It's just they're high historically recent history. I mean, it's really the recent history that a lot of people are focused on, and it's the jump that it had. That's what was so unusual here, is
Right.
how quickly the rates were rising, and that's something that is just really hard for growth stocks to to power higher through. There's a lot of things that happen with valuations, and look, the good news is, look, we had some high GDP numbers. Jobless claims are showing, still a robust labor market, but a lot of people are thinking that the 10-year Treasury yield is kind of doing the Fed's job for it, and possibly making it, well, actually a higher likelihood that they're not going to have to do anything at the next policy meeting. So that's something that is kind of, it's already getting baked in a little bit here with the 10-year Treasury. So there might not be as necessary action for the Fed to do. But as long as that 10-year stays as high as it is, that is going to be a damper on stocks.
Yeah. A historic move higher, no doubt, and the highest level in some 16 years. Definitely something to keep in mind here. But maybe we'll see that 5% ish level be a ceiling. That's yet to be seen.
Yeah. Mm-hmm.
Okay, let's move on and just quickly take a look at some of the sector action today. SMH breaking here a little bit, down 0.9%, now right at its 200-day line. IGB tracking the software sector, undercutting the lows of the base here, down 1% today. And XRT, we're going to take a look at Walmart, but here's retail, maybe a slight bright spot here, trying to bottom, up about 0.4% today, Justin.
Yeah, and to be clear, most of retail is still in this downtrend. I mean, it's been below the 200-day moving average line. It's looked horrible. But one of the things we were talking about on IBD Live today is that there are these bright spots in retail, and Walmart just happens to be one of them. Yes, there was some, quite a volatile day on the 6th. I think that was the 6th, the follow-through day that we had, where it was.
That was the
Look,
Novo Nordisk, Eli Lilly kind
yes,
of.
exactly. Yeah. So all of those, a lot of retail folks were saying, gosh, these weight loss drugs might infringe upon our snacking culture. And, that could hit us here. I mean, if you look at XLP, a lot of the staples have been doing poorly, the consumer staples, which is usually a hiding spot for a lot of money during downtrends. But Walmart, as bad as it took that news, it really kind of came up very strongly by the end of the day, and it really kind of tried to recover. Now this is a very V shape right now, but it almost got all the way back up to those 165 highs and is holding up above its 50-day moving average line. The relative strength, you look at that, and I mean, Walmart looks like back like it did when in the 80s, when it was having its heyday. So really interesting action there. And this was our stock market stock of the day by Harrison Miller. He was talking about what some of the chart action looked like and what some of the prospects look like too. So that's definitely worth checking out.
Yes, it is. Okay, let's move on and take a look at FTI, a standout in the oil and gas sector today, on the move with a breakout attempt, up 9%, heavy volume, and an RS line blue dot for this stock, Justin, and a pretty orderly base here.
Yeah, a very orderly base. If you hover over there, you can see that the depth very very mild, 14%. So it still fits the flat base level, and the definitely a lot of power today. I mean, it was up over 9%. I think it might have reached 10% at one time. A lot of volume after it came out with earnings, but you have to be very careful with the big moves here in earnings, because a lot of that can be given away. We saw that with Microsoft, as you pointed out. So in a bad market, just recognize that there are some headwinds, and it's not like there's a lot of oil movers today. XLE was down, XOP, OIH, a lot of the oil stocks, USO, that's been taking a little bit of a breather. So this is bucking the trend, and earnings were kind of helping it along the way there. But that doesn't mean like, oh, hey, this is breaking out of a flat base, let me go out there and buy it. Remember that when the market is in a correction, a lot of those base patterns don't work nearly as well.
Yeah. Well said, Justin. Last on the list, let's take a look at ANET. This is another issue with earnings season because ANET, like you said, it didn't have earnings, but moving with the big tech names that are its customers that did have earnings this week. So really breaking down today, a drop of 8.7%, really heavy volume, breaking below the lows of the recent base. It was hanging on to the 50-day line by a thread prior to this, but uh, just when we thought that Arista's personality had changed, it goes back to its wild ways.
Yeah. And again, the main point here is that things can look fine until they don't, right? And that's kind of the market that we're in. A lot of things are getting clobbered. A lot of things, it's just like the rug is getting pulled out from under you. Now, look, ANET, and Ed Carson was bringing up this point on IBD Live. ANET could be fine once its earnings come out. It could be like, hey, we're okay. If you look at FTNT, that had a really ugly earnings reaction last quarter, and that was dragging down GroupMate Palo Alto, PANW. But
Mhm.
look at what happened with Palo Alto. It kind of recovered, and was when its earnings happen, it's like, yeah, we're not having the same troubles that FTNT are. So that is something that is possible, but you got to recognize that it does kind of change the shape. It does change the look of the base, and you almost have to give it some time in order to recover from that kind of break.
Mhm. Okay, well, that is it for today. Other than, let's check in on Amazon after the bell. Right now, up 3%. But again, we did see an initially positive reaction from Meta after the bell yesterday. So, what is Amazon going to say on the call? What are investors going to latch on to? We'll have to see. But right now, up 3%. Your thoughts, Justin?
Yeah, so this is something that Chris and I were talking about in terms of looking at the market move. I think the market move, based on the options market, had this pegged at staying within 9. That's either up or down, and so right now it looks like it is staying within that range. But as you mentioned, just because it's doing it now doesn't mean that's how it's going to open tomorrow or close tomorrow. So there's a lot of back and forth that we may have to watch in the meantime.
Okay. Well, we will be talking about this one on IBD Live in the morning. I know that. So everyone be sure to tune in investors.com/IBD Live for all the details on that. We'll be going over the team's thoughts on the market action, stocks we're watching, portfolio management strategies, and more. And we're going to be joined by Anne Marie Band of thetradingbook.com and welcoming her back to the show. So that'll be a good one. Make sure you join us, investors.com/IBD Live. We'll see you there. And we'll also see you right back here tomorrow at the close to wrap up the week.